All right, let's pull back the curtain on one of the most famous financial institutions in the entire world. We're going to dig into how the New York Stock Exchange actually makes its money.
We've all seen the pictures, right? The frantic trading floor, the iconic opening bell ringing. But that's really just the stage. Today, we're going backstage to figure out the real business model, the actual revenue streams that power the whole operation.
Okay, so the first and, let's be honest, the most obvious way the NYSE makes money is pretty much exactly what you'd guess. It takes a tiny little slice of every single transaction that happens on its platform.
I love this analogy. It really is like a toll booth on a massive financial superhighway. Every time a stock is bought or sold, the NYSE is there to collect a small transaction fee for providing the road. Now, it might seem tiny, but when you think about the insane volume of trades happening every second, those little fees add up to a massive stream of revenue. So, who's actually paying these tolls? Well, it's the big players, the registered market participants. We're talking about major brokerage firms, trading houses, asset management companies. And get this, on top of the fee for every trade, they also have to pay one-time registration fees and recurring annual fees just to have a seat at the table.
But transaction fees? That's just one piece of the puzzle. The next major way they make money is by acting as the ultimate gatekeeper. The NYSE actually charges companies for the privilege of being traded there in the first place.
And this quote on the slide, it absolutely nails it. For any company, getting listed on the NYSE is a huge stamp of approval. It screams prestige, stability, and trust to the entire global market. And you better believe they pay a premium for that prime placement.
And we're talking about a huge scale here. I mean, think about it. Over 2,400 companies have chosen to list on the exchange. That's everyone from the biggest, most established blue-chip giants to some of the most innovative new companies on the block.
And if that last number didn't blow you away, get this. All those companies, when you add them all up, represent a total market capitalization of over 28.8 times trillion dollars. That is just a staggering number. That's the ecosystem the NYSE manages. And don't think for a second this is just about regular company stocks. Oh no. The NYSE's product catalog is incredibly diverse. We're talking preferred stocks, bonds, complex funds called ETPs, warrants, options, you name it. And every single one of those is another opportunity to collect a listing fee.
So how do they actually charge for this? Well, it's not just a one-and-done deal. Companies pay a pretty hefty initial fee just to get their foot in the door. Then they pay a recurring annual fee just to stay listed. And on top of that, they get charged extra fees for any big financial moves, like splitting their stock or issuing more shares.
Okay, this next part is where things get really interesting. Let's talk about what might just be the NYSE's hidden gold mine selling information about all those trades. This is a huge shift. In our super data-driven world, the NYSE figured out something incredibly important. The information about the trades can be just as valuable, sometimes even more valuable, than the trades themselves. So now, they package up all that data and sell it to anyone who wants a competitive edge. And what are we talking about here? Pretty much everything you can imagine. They've got the live, up-to-the-millisecond data feeds that high-frequency traders absolutely need. But they also sell deep historical data for researchers building algorithms and summary data for reporting and auditing. It's a whole information business running alongside the exchange. They even sell a straight-up speed advantage. It's a service called colocation, where trading firms pay big money to physically place their computer servers right next to the NYSE's own servers. That physical closeness shaves off crucial microseconds from trade times. And in the world of high-frequency trading, that tiny advantage can be worth millions. All right, so we've got the fees from trades, the fees from companies listing on the exchange, and this huge business of selling data and tech. Let's put it all together and see what the big picture looks like. Now, before we look at the numbers, there's a little bit of a catch if you want the most current data. Back in 2013, the NYSE was actually acquired by a company called the Intercontinental Exchange, or ICE. So today, its specific revenues are all rolled up into ICE's much larger financial reports. But we can look at the last available data from 2012, right before that acquisition. And yeah, you can see transaction fees were the biggest slice of the pie, at 63%. No surprise there. But look closer. listing fees, market data, and tech services. Together, they made up a really solid 30% of all revenue. That's huge.
And this table really drives home the sheer scale we're talking about. I mean, you're looking at billions of dollars in revenue, year after year. But what's really fascinating is how consistent and reliable those other streams were. Look at market data and listing, consistently bringing in hundreds of millions of dollars year in and year out.
And this is a really important point to remember. The NYSE's entire business model is shaped by its long history. It's what's called a hybrid auction market. It still has that physical floor. That makes it fundamentally different from its main rival, the NASDAQ, which is a fully electronic market. And that difference creates unique opportunities for making money.
So that really brings us to the big question, right? In an age where trading is instantaneous, global, and almost entirely digital, is the NYSE's most valuable product still the ability to execute a trade? Or has its real value shifted to something else? Is it selling access, information, or is it that incredible prestige that comes with a 230-year history? What do you think is the most valuable asset the NYSE really sells today?